Good afternoon, traders, and welcome to this week's Forex Focus, the show where we look ahead at the opportunities that could be setting up in the FX markets. Now, unfortunately, over the past few weeks, all of the pairs have been literally consolidating. So there hasn't been that many opportunities to take sort of long-term profits, to take some of those swing positions that we like that can run for some days and weeks. Unfortunately, a lot of the moves have been quite short-lived, so we've been looking at shorter-term opportunities, and this week isn't really going to be any different from that. We've got one opportunity that we're looking at, which if we do take it, it's not going to be a super long-term opportunity. We'll just be looking to scalp for a few pips profit. I say few pips, but 50, 100-ish pips profit. And we've got another opportunity which isn't setting up right now, but it's a very, very interesting chart pattern. So every time this particular pair breaks out, it seems to go on a bit of a tear. And we think now is going to be no different. So it's setting up at the moment. It's going through a very, very long consolidation phase. And if it breaks out either to the upside or to the downside, it's going to be something that's very, very interesting for us. Okay, so let's jump over to the charts and talk about those opportunities. So the first one that we're looking at, which is the more imminent opportunity, is the one in the Aussie New Zealand. This one right here. As you can see, the market has been moving up and up and up and up over quite some time now. And what it's basically done is it's broken out from this previous level over here. So previous level of resistance. Okay, it's come up to this level. It's broken out of there. It's held above for a little bit. And now it's sort of playing with this level. Now, as I said to you, we're not looking for any long-term opportunities here. So there's two trades that we potentially can take. The first is a break beneath this low over here on the 4-hour chart. If I just get in there. Is if the market breaks beneath this low right here, all right, then we'll be looking to take a short opportunity for, not so many pips, so very quick sort of scalping, if you like. We're not quite scalping because we'll potentially hold it for a day or two, but a quick opportunity back within this level down towards this sort of danger zone here, so around the 1.0653. And it'll be a one-to-one position, so we'll put our stop very close just above the highs there. However, if the market manages to hold above this level, and at the moment it's toying with it, so hold above this level here at 1.0792 and give us an opportunity for a counter trend line break on, so let's go over to the 1-hour chart. You know the ones that we're talking about. We've had a couple of these opportunities over the past few weeks, and they've all paid us very, very nicely. So if we look at this over here, the market breaking back out above this trend line here, above the 1.0792, so around this sort of area here, then we'll certainly be looking to take this to the upside. Stops below the low there, okay, and with our eyes initially on the highs. We'll see how we do at those highs. If the market's got momentum enough to take us through it, then we'll trail our stop upwards and ride it for as much as we can. Okay, so just a quick recap. Aussie New Zealand, we can basically play it two ways. It's at a key level right here, so it's either going to break all the way back down towards this sort of congestion area around here. So it's either going to break back down from this level here, or it's going to find some momentum, the same momentum that's carried it all the way up to the level. This is 1.0792, all the way up here. The same momentum there to then carry it above from this level here, and see if we can then get another opportunity to the upside. The nice thing that we can see here is that we're sort of playing with a previous level of resistance become support at this sort of area here. So potentially quite a nice opportunity, but by no means it's not going to be a long-term opportunity. All right, so it's not going to be one of those that we hold for a period of weeks or anything like that and ride it for hundreds and hundreds and hundreds of pips. We're going to look to trade it until the momentum falls out of it, and once the momentum dies, then we'll look to cut the position and basically take stock of the situation and see what else is going on. Although at the moment it's quite difficult because obviously we've got a lot of the markets are consolidating. They're moving sideways, which doesn't really leave a lot for us traders to have. But as we spoke about last week, it's about discipline. These things happen in the market. They happen all the time. When you're a new trader, you kind of feel like, the markets are never, ever going to move again. So you try and look for any opportunity. But as professionals, we just wait here and wait for the market to tip his hand. And when it does, we look to take advantage of the opportunity. So the trade that I'm talking about is this one here. If you take a look at this, it's pretty much best depicted on the weekly charts. But if you take a look at this trade here, over the past couple of years, the dollar yen has gone through a consolidation phase, followed by a big move to the upside. Now, we don't mind too much if it's to the up or the downside. The data in the US has not been as well, it's actually been pretty terrible, to be honest with you, but it's not been what we've expected. We're expecting strong data out of the US to start raising interest rates, all of that kind of good stuff. Unfortunately, it's not been supported by the data, so there could be a change in sentiment towards the US dollar. But either way, we believe that with the dollar yen here, whichever way it breaks out, it's going to be good for a prolonged move. So we've got our eyes on the dollar yen here, looking at the bracketing this range. So towards the highs up here, so a break above the highs, we'll be looking for an opportunity, or a break below the lows here, we'd then be looking for the market to drop down towards these levels at the 104, 105 type level. So on either side, you've got a good sort of 1,000 pip move there. You've got lots and lots and lots of potential on either side of this particular trade. But it's a very, very interesting dynamic. And as traders, that's the sort of thing that we have to be able to learn to take notice of. We obviously have our systems that we like to trade. We have certain setups that we like to take advantage of, but we have to learn to read the markets and to identify opportunities, to identify patterns that have occurred in the past and have paid nicely, and hence potentially will occur again. And if you take a look at this one right here, with the dollar yen, it goes through a consolidation phase. After that consolidation phase, there's a prolonged move in a direction, and we're looking at a period of weeks and weeks. After that, it goes through another consolidation phase. As you can see here, it consolidated between May 2013 up until August 2008, and then 2014, sorry. And then we get a nice move over a period of weeks. It's actually a few months there. And now we've got the same movement again. So potentially, this consolidation phase could go on for another few weeks, for another few months. Who knows? But when the market's ready to break out of this level, then we're going to be there to take advantage of it. Because we believe that when it breaks out of this level, there's going to be a nice move. We're going to be looking at not just a few hundred pips, but potentially a few thousand pips in any one particular direction. So seriously, something to pay attention to in the coming weeks and months. Just have it there on your radar, have it there as part of your portfolio, and keep an eye on it. Okay? So thank you very much for watching this week's Forex Focus. I hope you found value here. I know it's a little bit frustrating when we don't have a lot of trades to talk about, but as I've said many, many times, not just in this video, but over the past few weeks, this is part of the life of a trader. We can't always be in the markets. We can't always look to be taking opportunities. We have to remember that a lot of the time, taking no position at all, so not taking part in the market, is actually taking a position in its own right. We're deciding that the market is not right for us, that we're not going to make money if we're in it. We need to remain patient as traders. And I promise you, even though it feels like a lifetime that we've been going through this consolidation phase, it will come to an end. Volatility will come out of this, and we will see nice long trending moves. We just have to be ready for them, and we just need to be patient, and we don't need to destroy our accounts in the meantime, because that's where you're going to go wrong as a retail trader. It'll be a time like this when there aren't any opportunities, so you'll start to invent opportunities that don't really exist, and by the time the real opportunities get there, you've already depleted your account. You're starting from a huge loss to be able to claw back just to get back to even, and that's going to cause poor trading in any case. And that's not where you want to be, all right? So please remain disciplined. Thank you very much for watching this video.